pleasant afternoon to each and everyone. I hope you guys are having an amazing day so far. This is Syra, and on behalf of our team, I would like to warmly welcome you to this week's session of our collective webinar. As the deadline for the submission of an external audit report to some of the respective authorities is gradually approaching. For this webinar topic, our team of experts aims to discuss the fundamentals of performing an external audit in accordance with the commercial company law and share valuable information on the deadlines for each licensing authority. Further, AMCA, as one of the leading auditing firm in the industry with over decade-long experience, have organized this webinar for companies to have a better understanding on conducting an external audit and how we, as an approved and licensed auditor with the Ministry of Economy, can be of assistance to your company in the preparation of your accounts and financial statements. Together with me are Ms. Mariam and Mr. Shari, who will both share their valuable insights and opinions to the questions that will be raised. Again, the first half of the session would be for our team to discuss the relevant topic for this week. You can send your questions and clarifications on the message box below, and we will be having them addressed in the latter part or the Q&A session. I will not drag the introduction any longer, and we will now proceed with the discussion for this webinar. For our webinar pointers for today, this will be the topics for this webinar. Applicable law and regulations on conducting an external audit, importance of maintaining financial statement for mainland and freezone companies, and deadline for submission of external audit for each licensing authority. So I will be giving you some overview of the company commercial law as per the Federal Decree Law number 32 of 2021 on commercial companies, abrogating Federal Law number 2 of 2015. As part of the UAE government's major legal reforms, during the 50th anniversary of UAE, Federal Law by Decree number 32 of 2021 concerning commercial companies was announced on 20th September 2021. The new law repeals the previous commercial company law, being Federal Law number 2 of 2015. The new law puts emphasis on foreign investments and ownership, new corporate vehicles, and general corporate governance matters, all aimed at creating a more investor-friendly and business environment. The present decree law aims to contribute to the development of the working environment and UAE's capabilities and economic position in accordance with global changes. The United Arab Emirates government published the Federal Decree number 32 of 2021 concerning commercial companies law, which came into force on 2nd of January 2022. So for the forms of companies as mentioned in the Decree Law number 32 of 2021, there are five type of companies, which are the joint liability company, limited partnership company, limited liability company, public joint stock company, and private joint stock company. For joint liability company, it consists two or more physical partners to be severally and jointly liable in all their personal assets for the company's obligations. Basically, everything concerning company matters, the partners will be held liable equally. For the limited partnership company, it is consisting of one or more joint partners having the capacity of traders who shall be liable severally and jointly for the partnership's obligations, and one or more silent partners who shall not be liable for the partnership's obligations except to the extent of their contribution to the partnership's capital. Silent partners as well doesn't have the capacity of the trader. While in limited liability company, they shall have a name derived from its object or from the name of one partner or more, provided that the name is followed by the expression limited liability company, or in short, LLC. It is consists of a number of partners that is not less than 2 or not more than 50, and each of them shall be only liable only to the extent of his share in the capital. It is permissible for one physical or juristic person to incorporate and own a limited liability company. For public joint stock company, it is a type of company whose capital is divided into equal and negotiable shares, with the founders subscribing to a portion of them. The remaining shares will be made available for public subscription. But for the private joint stock company, they're a company wherein the number of shareholders is not less than two, and as an exemption to the minimum number of shareholders, a juristic person may incorporate and own all shares in private joint stock company. The name of the company shall be followed by the expression sole proprietorship private joint stock company, and the dividend into equal valued shares. The company capital must be paid in full without any shares being made available for public subscription, unlike the previous form of company discussed. For the guidelines in preparing the accounts of the company, we have the framework or the structure on how we can properly address this topic. So in the first part, it is the preparing the accounts of the fiscal year, which covers the practices and standards. The company shall prepare the annual financial accounts, including the balance sheet and the profit and loss account in accordance with the international accounting practices and standards. International accounting standards are a set of rules for financial statements and have subsequently have been adopted by most major financial markets around the world. The financial statements shall be approved upon signing them by the board of members or by the chairman and the auditor. Such accounts shall reflect a true and fair view of the profits and losses of the company for the fiscal year and the affairs of the company at the end of the fiscal year, and shall comply with any other requirements prescribed in this decree, law, and decisions issued by the authority in this respect. For the record keeping of our accounting registers, every company shall keep accounting registers showing its transactions so as to accurately reveal at any time its financial position. Companies' accounts should be kept in accordance with at least 5 years from the end of the fiscal year with the provisions of this decree law. The company may keep an electronic copy of the original of the documents and registers kept and deposited in accordance with the controls issued by the decision of the minister. For the appointment of company's auditor, it is a part of performing the audit of the company. The company may, upon its incorporation, appoint one auditing company or more to be approved by the authority to assume its duties until the completion of General Assembly's work for the first fiscal year. For the qualification, the auditor shall be licensed to practice the profession in the state and have experience in auditing for the last 5 years. The auditor's name shall be approved by the relevant authority, and the auditor shall be independent in nature. No person shall be appointed as auditor of a company who is an officer or employee of that company or of an affiliated company. For the duties of the appointed auditor, they shall audit the accounts of the company, inspect the balance sheet and profits and losses account, review the transactions of the company with the related parties, and verify the application of the provisions of this decree law and the company's statute. Upon preparing his report, the auditor shall verify the validity of accounting registers of the company, the consistency between the company's accounts, and the accounting registers as well. The auditor has a right to access at all reasonable times to the company's records and is entitled to require from the company's officers such information and explanations as the auditor considers necessary for the performance of the duties of the auditor. For its liabilities, the auditor shall be liable towards the company for the audit and the validity of the statement in his report, and to indemnify the damage incurred by the company due to his act upon performing his job. That is why auditors needs to maintain their integrity in performing their report, and if there is more than one auditor, each of them shall be liable for his own fault that caused the damage. The auditor shall keep confidentiality of the particulars of the company he has perused in the course of performing his duties with the company. Concealing the true financial position of the company. An auditor who deliberately provides false statements in the balance sheet or profits and losses account or in any financial report or omits material incidents in such documents for the purpose of concealing the true financial position of the company shall be punished by imprisonment for a period of no less than 6 months and no more than 3 years, and or a fine of not less than 100,000 AED, 100,000 dirhams, and not exceeding 500,000 dirhams, sorry. For the preparation of audit, we have prepared some guidelines in performing the audit accordingly as per the federal decree law. The accounts of the company's fiscal year shall be reviewed by the auditor who shall prepare a report thereon. For the first fiscal year of the company, every company shall have fiscal year as determined in its statute, provided that the first fiscal year of the company does not exceed 18 months and is not less than 6 months, commencing as the date of the company's entry in the commercial register at the competent authority. The subsequent fiscal years shall consist of consecutive periods, each of 12 months, commencing directly upon the expiry of the preceding fiscal year. During the first audit, the report can cover up to 18 months of accounting registers, and for the succeeding fiscal years, 12 months will only be covered. For the content of the auditor's report, should be the position of the company at the end of the fiscal year, particularly the balance sheet of the company, the profits and losses account and companies maintaining regular accounts, a statement whether the company has purchased any shares or stocks during the fiscal year, an indication that the data contained in the board of directors report are identical to the books and registered of the company, the statement of the deals with conflicts of interest and the financial transactions made between the company and any of the related parties and the procedures taken in that respect. A statement whether there are fines imposed on the company due to violations of this decree law or the company statute during the ending of the fiscal year and whether such violations still exist. For the publication, in this part, we will be tackling the submission of an audit report as well as the guidelines for this one. So under the publication of the balance sheet of the company, the annual financial statements of the company shall be published in accordance with the controls set by the authority, and a copy thereof shall be deposited with both the authority and competent authority. As shown in the previous slide, upon publication, the audit report shall abide with this content so as to make sure that it is up to the standards of the relevant authorities. For the issuance of audit report, it is subject to the provisions of the federal law and regulations of the auditing profession and its amendments. The auditor shall issue a report on the accounts audited by him. The auditor shall state his name on the report and sign it. The report shall state whether the accounts have been prepared in accordance with the provisions of this decree law and whether the accounts give a fair view of the financial position of the company. The company shall provide the authority and the competent authority with a copy of the accounts and auditor's report. An audit report is a written opinion of an auditor regarding an entity's financial statements. If the company has more than one auditor, the auditor shall then distribute the duties among themselves, and each of them will provide a separate report on the duties assigned to them. They will create a joint report for which they are be jointly liable. The company shall provide the authority and the competent authority with a copy of the accounts and the auditor's report. Some authorities require the company to upload a copy of their audit report on the respective authority portal as well. Moving on, here are the next For the next slide, we will be tackling the deadlines of external audit on each licensing authority. Under the submission within 6 months from financial year end of the company are the following authorities: Dubai Multi-Commodity Center or DMCC, International Humanitarian City IHC, Hamriyah Free Zone, Sharjah Airport International Free Zone, Media Zone Authority or 2454. Under the financial audit report is annually required from LLC companies as per renewal expiry date. Authority included the requirement in their reminder emails 1 month before the expiry date. For some cases, they extended the submission up to 3 months by taking undertaking letter from the customer, by taking official undertaking letter from the customer. Under this provision is Abu Dhabi Airport Free Zone, Khalifa Industrial Zone Abu Dhabi, Khalifa Port and Industrial Zone, and Economic Zone Score. For the audited financial statement required upon trade license renewal are Dubai Airport Free Zone, Dubai Healthcare City, Dubai Silicon Oasis, Dubai South, Fujairah Free Zone, and Dubai Commerce City. For the 4 months from the financial year end of the company that they require, external audit report is Abu Dhabi Global Markets or also known as ADGM. It is mandatory in the event that an entity wishes to liquidate or trade license cancellation is for International Free Zone Authority, which is known as IFZA as well. External audit shall be submitted within 7 months from the financial year end of the company if their turnover is more than 5 million US dollars. Is for DIFC or Dubai International Financial Center. They shall submit within 3 months from the financial year end of the company is Jebel Ali Free Zone or also known as JAFSA. As per the Circular 421 from 12th of August 2022, in compliance with the Private Companies Regulations of 2016, all the Free Zone LLC and branch license companies under Dubai Development Authority or DDA should submit the most recent audited financial statement by 30th November 2022. Under this provision are Dubai Development Authority, Dubai Internet City, Dubai Knowledge Park, Dubai Media City, Dubai Outsource City, Dubai Science Park, Dubai Production City, Dubai International Academic City, and Dubai Design District as well as DIC. For the mandatory of each company registered to have the report created but not required to submit it. It is recommended to keep this on company premises in case authority requests you to present it for their information. Dubai Textile Village, International Media Production Zone, Dubai World Trade Center, Sharjah Media City Free Zone, Ajman Free Zone, Ajman Media City Free Zone, Ras Al Khaimah Economic Zone, Fujairah Creative City, Umal Quain Free Trade Zone, SPC, Maidan Free Zone, Masdar City, and Sharjah Research Technology and Innovation Park, as well as DUQE. So we will be addressing the question and answer portion in a few minutes while we wait for the ongoing questions that have been provided already in the comment box. So if you have any other questions, please write it in our comment box and we will be addressing it accordingly.